Welcome to another episode of Exploring Prosperity. My guest today is Larry Lepard, investor and author of the great book, The Big Print. Larry spent decades inside the financial system and has become one of its most thoughtful critics. We talk about how the fiat money system came to be, how it concentrates power, and how it affects behavior and outcomes across society in ways most people rarely associate with money. Larry, it's great to see you again.
Nice to see you, Bob. I'm looking forward to this.
It was fun running into you at PubKey at Natalie's book signing.
Yeah, that was a fun event. She's got a nice book.
Well, in preparation for this, I started looking around at some of the other podcasts you've done, and I found out that one of your good friends is a good friend of mine, Trey Rake.
Yeah.
He's something of a Bitcoin skeptic. And ironically, he was the person that orange-pilled me.
Is that right? Isn't that interesting? Yeah.
So back in 1999 and 2000 and 2001, we rode the train together in and out of New York City.
Oh, no kidding.
He just was so enthusiastic and so interesting to listen to, and he just went through, and this is not dozens of hours, it was really hundreds of trips. And he taught me about central banks.
Sure.
And the fiscal certainty that deficits would continue. He made all those connections for me. And gold at the time was, I want to guess it was about $500.
Yeah, $300 in 2000.
I asked him, when should I actually really buy into gold? And he said, when all of the central banks of the world coordinate. And that's what happened in August of 2007. And gold was at 666, and that was when I bought it. I remember his lesson.
Yeah, good for you. I remember buying it then too. Yeah, he's a great guy, and he's a very strong, sound money advocate. And it's funny. I think he's softened his stance on Bitcoin a little bit. I mean, guys like me and others have kind of convinced him that it might be worth his time. Although I know he's more gold and silver, obviously.
Well, and I'm in both of your camps. There's nothing wrong with gold.
No, not at all. They both work. They're different, really. It's like analog and digital, right?
Yep, exactly. Well, one of the charts that he showed me that was so compelling, and that was the one that really landed on me, was he showed me over decades, every time the central bank would cut interest rates, there would be a GDP response. Yeah. And he showed exactly how that response kept getting smaller and smaller and smaller. And under Greenspan, it shrunk to a fraction of what it had always been. And he said, it is a certainty that at some point in the future, that will be a zero response. Yes. And that eventually it will be a negative response. And then he pointed out human history and how all of the other currencies that have failed have gone through that same process. But what he really did was he pointed out the K economy. And the certainty of this
Sure.
wealth effect distortion, and this is the thing that is kind of the moral crusade part of your book. I just sense this indignation about this unfair system, and I want to start there.
Yeah, that's a great place to start. I know I've been accused of being kind of an angry old guy, but it's. We're of similar ages, and I think we remember an America that was, as the first George Bush said, kind of kinder and gentler. You know what I mean? It's it's become kind of a big money grab, and I don't like that. I don't like the world that my kids are growing up in. My someday grandkids will grow up in. Based on what we've got right now.
No, it's really true. Explain a little bit about you talked about how how easy money starts distorting price signals and starts pushing asset prices higher, and wages can't keep up.
Yeah, well, that's the fundamental problem with a system where money is created via debt. And then the price of that debt, that's a problem unto itself, but that's a different issue. But the bigger problem is that the price of that debt is set by a committee of 12 people in Washington, D.C. And they even if they were geniuses, they couldn't get it right because the marketplace should be setting the price of that debt. And so what it leads to is what Austrian economists call malinvestment. In other words, because the money is mispriced, people do things that don't make sense economically. And for a little while, they may, look like they're doing well, but then, of course, the flaws get exposed, and the malinvestments get liquidated, and we have a crash. And then, of course, they have to cut the interest rates again to try and get us out of that ditch. So, this all leads to, unfairness in the sense that, there's a certain class, and my book talks a lot about this, there's a certain class of people that are able to borrow money at very, very cheap rates. And, they're close to Wall Street. I mean, there's a great story in my book about how, the wife of Morgan Stanley, it was chronicled by Matt Taibbi. He wrote an article for Rolling Stone called The Real Housewives of Wall Street, which I highly recommend everybody Google and read. It's still publicly available. And, here in the GFC, this woman was able to borrow $200 million non-recourse from the Federal Reserve to buy distressed assets. And I mean, at a very low interest rate. And that deal wasn't available to you or to me, Bob, or to the average citizen. And of course, all those assets were going to appreciate in value, and she made a ton of money on that trade. But if the average person decides they want to borrow money, really the only choice they have is their mortgage, which is, not a bad thing to borrow against. A house has real value, and those rates are, reasonably cheap. But, even cheaper rates were available in the ZIRP environment. And so, people were levering up and buying assets, and it's a broken system. I mean, the average citizen who wants to borrow outside of their mortgage has to pay, 20-something to, now I've seen cards in the 30-something on their credit card rates, which is really just usury. I mean, and they say, well, they need those rates to take care of the bad lenders. No, they don't. They shouldn't. Those rates should not be allowed to protect people from themselves. Because anybody who's borrowing at 35%, they're never going to, it's a trap they can't get out of. It's really kind of a form of slavery.
Well, and that's a pretty clear example of the Cantillon Effect, where the Federal Reserve will put money into the system when it wants to, and the banks are where that money goes, and the banks are lending money at 30% to the people that are borrowing on that basis, which is normally a mistake. I forgot to pay it off, or I couldn't get it this month. And there it is, plain as day. The banks
borrow at the Fed funds rate of 4%. They loan it out at 32. That's nice work if you can get it. And it's even worse than that, because as we know, if the banks prove that they get too over-levered and do a bunch of stupid things like they did in the GFC, then when they're all technically bankrupt and they should have been shut down, the government comes in and bails them out. There's a guy on Twitter, Lloyd Blankfein, the CFO or CEO of Goldman Sachs, used to try and hold forth on Twitter about, policy A or policy B or policy C, and I would just blast him every time and just say, hey man, shut the fuck up. The fact of the matter is you were bankrupt in 2008, we bailed you out, and that's why you have a $60 million house in the Hamptons. There's so many examples of that. These people just think they're entitled to take advantage of the system, and they've rigged the system in their own favor.
This show is being brought to you by our sponsor, Trueflation. Professional investors and economists and probably any casual observers know that government inflation statistics are only an approximation of what real inflation is. Not only that, but the government has a conflict of interest because high inflation can be so damaging to the economy, the deficit, and our $36 trillion in debt. Trueflation collects over 80 million pricing data points. Most are updated daily to reveal inflation with precision for asset managers, governments, companies, and the general public. Check them out at trueflation.com. One of the fascinating things is that when the light bulb went off after all those train rides with Trey, I was on Wall Street covering a lot of the large hedge funds and money managers in the equity business, and I would bring this subject up, and it won't surprise you that nobody knew anything about it and nobody cared.
No, that's absolutely right. Well, it didn't butter their bread. I mean, they're all doing well and they like the system as it is. I mean, there are a lot of people who benefit from this system, and obviously they're going to fight tooth and nail to have this system be changed. I mean, a good example of that is kind of Jamie Dimon, in the way that he, was so negative on Bitcoin because he recognized what an existential threat it was to his basic business, But there are people in the system, too, who were smarter than Dimon, a guy like a Larry Fink, who's pretty much a cantillionaire, and yet, at some point in time, he sat down and he did the math, and he said, you know what, I got to make a decision here. This thing's probably going to work, and do I either want to make money off of it or ignore it or criticize it? Gee, I think I'll pick, I think I'll pick making money off of it. And so we obviously opened up IBIT, and it's been a fastest growing, most successful, ETF in history, and creates huge revenue stream for BlackRock. So, even the traditional finance guys eventually have to get it. And of course, now JP Morgan will actually custody or, loan against Bitcoin. So even within his own organization, Jamie Dimon hasn't been able to hold back the floodgates. I mean, I remember back in the early days when he was talking about it, he said anybody who was, caught trading it would be fired,
So that was the first time I ever bought Bitcoin, because 2 weeks before that.
It's a contrarian bet, right?
It was so funny. I'm sitting watching the television, CNBC, and China bans Bitcoin, and Bitcoin goes 10%. And I thought, that's weird. The little bit that I know about Bitcoin, it should be going up when they do that.
Yeah.
And sure enough, 5 days later, it's past the old high and it's going higher. And then Jamie Dimon came out and said, I will fire any trader. And I watch it, and Bitcoin goes down immediately 10%. I said, okay, I'm in.
I'm in, exactly. So.
And it did just take off right after that. A little bit like gold.
It's kind of inevitable, and it's hard. It's harder. One of the things that you and you're probably dealing with, I know I'm dealing with it, are, I've been in it since 2013, 2014, and so I've lived through a bunch of roller coaster rides, and I bought the dips and all that kind of stuff. And, some people probably bought it in the 100,000 range, and now it's a little bit soft off of that, or they, whatever. People are kind of like, hey, what the heck? I've been in this for a few years. It's not really working yet. And, they're getting their, they're finding their sea legs. I mean, this is the way it is. Sometimes it sits there, it doesn't do anything, and then suddenly it does a big catch-up. And so, that catch-up is coming, in my view, sometime probably in the next 18 months. It's very easy to either get bored with the asset or to think, gee, maybe I made a mistake. I paid 124, now it's at 80-something. And neither of those are true. I mean, it's a long-term valuable asset that's limited in supply, and it is emerging as digital gold. And so as a result of that, everybody who holds it, I think, will be, very well rewarded for it, but you have to consider multi-year timeframes.
It's true. It's a curiosity of mine. One of the big differences when I started talking about this was literally nobody did know this. I didn't know it. I had been in the financial world forever. I knew what the central bank did every day because I watched Greenspan and the headlines of the news, a couple times a month. And I had started off in commercial banking. So I understood the system, but I did not understand the system.
Right.
And, I say he orange pilled me, but that happened to be about 10 years before Bitcoin
existed.
Yeah, it was. I guess it was eight years before it started, and he predicted the Fannie Freddie bankruptcies. He predicted the mortgage collapse.
Right.
And one thing he said, he also predicted that central banks would pump, but he didn't predict how much.
And none of us could. I mean, it was. I have to say, I always like to say that 2008 and the GFC kind of radicalized me for sound money, right? I mean, I was a gold bug and I was a silver bug, and I bought both and owned both well before the GFC. And I was an Austrian economist. I read all the Austrians, and I knew the Keynesian model was broken and wrong, and I could see the growth in the debt. But I have to say that when the GFC happened in 2008, I was just stunned. I was just like, hang on a second. You mean to tell me you're going to take interest rates to zero? That's impossible. I mean, money's supposed to have value. If it doesn't pay any yield, it has no value. It's like a tautology. You mean to tell me you're going to take the Fed balance sheet, you're going to double it quickly, and then lie and to Ron Paul and claim that it's going to come down just before you double it again? And so that was in my career where I really pivoted into being kind of all-in sound money partisan. I mean, up until that time, I actually spent from 1982 or 3 when I got into the business till that time investing in tech stocks and venture capital and growing technologies, and that was fabulous. I mean, I was around when the IBM PC came out. Mitch Kapoor came and gave a demo of Lotus 123 to my business school class, my second year at HBS, and I was kind of like, holy shit, I've been on Wall Street running numbers by hand, putting them on a spreadsheet. You mean to tell me I can do this on a computer and do 10x as much in the same amount of time? And so you could see what was going to happen with the growth of the PC and the growth of the technology. You couldn't see the internet. I mean, it was early 80s, right? But you could just see these things coming slowly and surely in terms of improving productivity. And so it was a great area to invest. I mean, we made a ton of money from the early 80s until 08. And in '08, I'd actually gotten to the stage where I was kind of, I wouldn't say semi-retired, but I was more kind of managing my own money, coaching my kids' sports teams, not so heavily involved in, not with a big fund. I had, multi-$100 million institutional funds that I'd managed up until that time, and we were shutting those, in the process of shutting those down. And so I basically said, all right, I'm just going to manage my own money. Well, when GFC happened, I was like, oh my God, yeah, I've got this number, but this number's not going to work if gasoline goes to $10 a gallon. I'm in my 50s, and hopefully I'll live to be into my 90s. And we all know one of the great fears I think that many people in the country have as they age is, do I have enough money? Am I going to run out? I saw it very acutely with my own father, who retired in his early 60s with a decent, what most people throughout the country would consider a decent amount, not Wall Street decent amount, but the average person would say, well, that's a lot of money. And yet, slowly but surely, it got eaten away by inflation, such that by the time he passed, there wasn't really nearly as much there as he had retired with. And so I kind of witnessed it firsthand. And I think a lot of us, you probably have friends like this too. I have friends who, have a paid off house, the kids are grown and out of the house, they've got decent savings. The things that a lot of people in the country would kill for, savings account of $1, $2, maybe $3 million. They're in their 60s, but they're thinking to themselves, I really can't stop working, and the reason I can't is I don't know how long that's going to last.
It's even a little worse than that. It's a confidence that there's going to be inflation that I won't be able to control, and I have to do something about it.
Well, that's exactly right. And so, with that, I think what's happened is more and more people have become aware of that existential risk associated with inflation. And so, we've just seen it this past year when, Mohammed El-Arian and others are starting to, they put a name on it. Bank of America called it the debasement trade, so that's the first time I've seen that. And then Morgan Stanley came out and said, instead of 60% stocks, 40% bonds, let's go 60 stocks, 20 bonds, 20 gold. I was like, holy crap, I fell out of my seat when I read that. This is one of the largest brokerage houses in the country recommending gold. And in my most recent quarterly report, I showed that, like 70% of the country has zero exposure to gold. And the other 30%, it's a small exposure. It's only like 10% that has over 5% exposure to it. So, there are those who look at these numbers and say, my goodness, silver's in the mid-60s, gold's at 4,400. This is run way too far too fast. I got to, it's got to be a bubble. It's ahead of itself. It's going to correct. And I'm kind of like, no, this is a 100-year trend where these things have been suppressed for a very long time, and the world is waking up to how important these metals are, and Bitcoin by extension, because it's really just digital gold, to protecting the purchasing power of your savings. And so, I think we've got quite some ways to run. In my investment reports and talking to my limited partners, I run a fund, I kind of say, I think we're in the second inning, maybe the third, and I don't know, it could be extra innings in this ball game. Depends on how, the hard part, Bob, is we don't know how they're going to respond in terms of policy, and we don't know how much they're going to print. And, I wrote the book, I called it The Big Print. This would really be the third big print, because the first one was GFC, the second one was COVID, and I think a third one is coming. And Lynn Alden, who's brilliant, whose book I used heavily in writing my own book, said, well, I would call it the Gradual Print. And I accept that. It's, they just pivoted, they've started printing gradually, 40 billion a month, although back in '08, 40 billion a month was huge. That was what Bernanke did. But so that's 480 a year. Well, that's not the same as the 4 trillion that we printed when COVID came around. So, it is a gradual print right now. But if they don't get the fiscal situation under control, gradual can become big. Is kind of my thought.
You just said if they don't. None of my friends, even including all the ones that don't like Bitcoin, think that there's nobody that thinks that we can control the fiscal.
Yeah, and I accept that, but I'm such a contrarian that when everybody gets to that view, Lynn's nothing stops this train. Keep your eyes open. There might be a surprise. We just don't know. AI
actually, if you look at the healthcare as
right.
a component that drives our deficit, and it's one of the major ones, that is one of the ripest targets for a complete
Completely. I mean,
reversal in the cost of healthcare.
completely. I mean, let me give you a scenario that maybe, I mean, I think we're going to have a lot of inflation any way you slice it. So I'm not at all worried about my thesis. But here's where the train could get semi-stopped or slowed down. AI helps in terms of productivity. The tariffs really kind of work. I mean, I've heard they're up to $30 billion a month now. The Doge stuff is a little better than expected, maybe brings things back. They do cut interest rates a lot, and that cutting of interest rates brings that $1.2 trillion of interest expense down to a more reasonable number. And then, at some point in time, Bob, I mean, right now, Social Security and Medicare are kind of the untouchable third rail of politics because of the boomer voting bloc, and because one, there are a lot of boomers, and two, they vote. But guess what? Those boomers are going to time out. They're not forever, and there are more young people coming into the voting world, so to speak, and they're sitting here looking at these things and saying, "Good God, you guys are not only the richest generation in history, but you're also taking all the social benefits." Hang on a second, that doesn't work. And so, you watch. I mean, I think at some point in time, means testing, and there could be things that are done to try to reduce, the social benefits. I mean, just one thing they could say, they could change the law and say we're going to stop COLA adjusting them and have a lot of inflation. And what that would mean, that would basically screw all the boomers who rightly paid into the stuff. But in turn, I mean, look, I'm not going to argue one side or the other, or what's the right justified thing to do. All I'm suggesting is that, threatened with an existential crisis of the currency failing, there are things that they could do to try and get, this balance to come back at some point in the future. And so I always have my eyes out for those,
Yeah.
because those.
I happen to think the two big ones are education and healthcare, a little more likely than touching Social Security or Medicare.
What they could do is they could rein the military in. I mean, sadly, Trump said he was going to do that. Now he's not. I mean, we decided we want to go mess around with Venezuela. We spend an enormous amount of money on the military. And from what I've heard, I mean, talking to a guy like David Stockman, who I met at an event and spoke to him about it. I mean, there's just enormous waste in there. And we're building stuff that's not relevant. I mean, we're building big things that can be killed by drones, and China's
that could stop quickly.
Better drone technology, yeah. So, maybe we should be investing in drones and not building big things. I don't know, So look, I keep my eye very open to all the possible things, but I think you're right. I mean, I feel extremely confident that in the next couple of years, particularly this year, where you have a midterm election coming up in 2026, you've got a change of the guard at the Fed. And the possibility of an extremely dovish Fed chairman, although I was reading in the Journal this morning that maybe that's not quite so sure. The thought was that there's no doubt Hassett would be the choice, and he's extremely dovish. He's like, let's just drop rates quickly. I think, Trump got some calls, and Bassett probably got some calls too from the bond market and said, hey, hang on a second, guys. You do that, we're going to revolt.
Yeah, be careful what you wish for.
Be careful what you wish for. And so now Warsh is on the table, and the other Kevin, there's actually another guy whose name I've forgotten, but there are a few other guys' names on the table that, okay, maybe we need to, have somebody who's a little bit more hawkish. Who knows? I mean, all of these things are hard to handicap, and it's hard to predict what's going to occur. I mean, if you looked at the beginning of the year, everyone thought we were going to be saved by Doge, and of course that was a big failure. So, and then, everyone thought the Liberty Caucus would rein in the spending, and the Liberty Caucus rolled over for Trump because he browbeat him. The only two who were able to hold out, and he's attacked them aggressively, are Thomas Massie and Rand Paul. So, it's
a
circus we're running there, Bob.
Yeah, I know. I think even in the optimistic scenario for deficit reduction of the various things that you spoke about and I spoke about, you still have this $39 trillion to pay off, which can't be done, and then you've got another $100 trillion or so behind that of unfunded liability.
I completely agree, and I would say the other thing that you can add to the negative side of the equation in terms of fiscal stuff getting better is, we're running a $1.8 trillion deficit, and the economy is healthy, and the stock market's at record highs. So let's just say for some reason, I mean, we just had an uptick in unemployment. Of course, all these numbers, who knows what the truth is, right? And I was glad to see some of those unemployment numbers. A lot of it was in the federal government, which is great. But you know, we have a downturn in employment. We have a slowdown in the economy. You know, the stock market stops being so bubbly. The AI thing kind of cools down, and I think AI is important, but I think it reminds me of .com, where value-wise, it's gotten ahead of itself. And so suddenly everybody's savings account, stock market savings account, is down 20 or 30%, and unemployment is up. Well, you know, the last time that happened, all the social spending programs kick in, tax revenues go down, you know, and a $1.8 trillion deficit becomes a $3 trillion deficit or a $4 trillion deficit. You know, that means you got to go sell bonds to cover that deficit and into a fixed size bond market. And, you know, the bond market's already kind of twitchy. I mean, it's you know, the 10-year's at 4.2. The two bond markets I watch more carefully because I think they're more leading indicators of the Japanese 10-year and the German 10-year. The Japanese is pushing up against record highs. And so, you know, if and when the bond market cracks, and I think it's only a matter of time until it does, you know, then yield curve control becomes the next choice, which is to say massive QE, massive printing.
We're proud to be sponsored by Foundation. They've created Passport, one of the top-rated Bitcoin hardware wallets, proudly made in the USA. It's fully open source and air-gapped, meaning your Bitcoin stays completely offline and secure. The shocking Bybit exchange hack shows why holding some Bitcoin offline diversifies risk. Now they're launching Passport Prime, your all-in-one solution for not only Bitcoin, but all passwords and 2FA security. Head to foundation.xyz to secure your digital future. I had, you know, people think about the reserve currency. I have, you know, friends that are in the dire camp where we're at the end, and we're going to get hyperinflation, and the dollar reserve currency is going to go away immediately. And so I had Lynn Alden on to talk about what is, you know, reserve currency. Like, let's go through it.
Yeah.
And what are the chances that it falls apart?
What did she say? I'd be curious to know. I mean, I don't think her base case is hyperinflation. It's not mine either.
No, she went through the network effect of the reserve currency and the ubiquity in international trade. It makes it a very sticky situation. That, you know,
it does.
She said every reserve currency sows the seeds of its own destruction. And ours is no different. And we're watching the beginning stages or middle stages of it, but that doesn't mean it happens very quickly. But when it happens, you write about this, it's a matter of trust, and when trust evaporates, it's very difficult to get it back.
Yeah, it could happen quickly. We just don't know. I mean, we do see, you know, the big, obviously grabbing the Russian reserves kicked it off, and then since then we've seen the Chinese and the Russians and everyone else dealing with each other in their own native currencies, and to the degree that, you know, the Saudis get some yuan in exchange for oil and they don't have something they want to buy from the Chinese, they can just go to the Shanghai Gold Exchange and convert it into gold. And so gold has become the neutral reserve currency. You know, treasury bonds, treasury bills are no longer the neutral reserve currency, so, or less and less becoming that. So yeah, I mean, we see it fading, but you know, how and when it accelerates, who knows? I mean, I think, you know, it's interesting. In writing the book, I read about a lot of hyperinflations. There have been many of them all around the world, and it's fun when you talk to people from other countries, you know, from Turkey or Brazil or Argentina. I mean, they're all like, well, yeah, this happened to me when I was growing up. I mean, I know what this is all about, you know. A great Argentinian guy said, yeah, I remember my mom and dad getting paid. They'd immediately run to the grocery store because the money was losing value. You know, what happens in other high inflationary environments leading to hyperinflationary environments is when everyone comes to the conclusion that they can never stop printing money and that therefore the money will always buy less in the future, you reject it. You have to get out of it. You get it and you exchange it for something else. This is just basic Gresham's law. Good money drives out trust. Good money drives out bad. And, you know, it accelerates as that word spreads. And I think there are a group of us, yourself, myself, Trey, Bitcoiners, gold, silver investors, we all believe that that's where we're going, but we're not fully there yet. I mean, I think a larger percentage of the population is aware of the issue today than they were 5 years ago. You know,
that was the main point when Trey taught me this and I started talking about it and nobody knew anything. one of the best benefits of the rise of Bitcoin has been how many people now do understand it.
Well, isn't that right? Yeah, yeah.
There are thousands of people that know it and believe it. There are tens of thousands that are close or already do. There are hundreds of thousands and millions who are in the process of seeing it all unfold.
I think that's exactly right. And I often said, the Bitcoin Standard by Saifedean Ammous really changed the world. It's probably one of the most important books of the century, because what it did was it exposed a whole group of younger people to Austrian economic thinking. I mean, those of us who are older and been gold and silver bugs forever, we got it, and we'd read the Austrians. We understood this whole issue was coming. But, you're in your 20s and 30s, you don't think about monetary policy. You don't think about Austrian, Keynesian. All that stuff is just kind of, it's all Greek to you. But you do think about technology, and you realize there's this new internet money, called Bitcoin, that's immutable and defensible, and then you start reading about it, and really that book doesn't introduce Bitcoin until in the back third of the book. I mean, the first half of the book is all about how broken the monetary system is, and so, and really with my book, what I tried to do, I mean, look, Safe's book and Lynn's book they're fabulous books. I mean, they're better than mine from a scholarly point of view. What I tried to do with my book, I just felt like there was a need in the marketplace, because I'd given those books out to friends, and they'd start reading them, and they bogged down, because they're kind of, particularly Lynn's, I mean, it's a fabulous book, but it's really a textbook. You got to be interested in this stuff to read it. And I thought, well, that's,
I guess I can't tell that because I guess I'm too interested in it.
Well, you're just really interested in it, so it came naturally. But trust me, I think, if I'd given Lynn's book to my wife, she would have gotten a little into it and said, I don't care, I'm not finishing this.
Well, Natalie's book is very good in that regard too, but yours was also.
Yeah.
Your organization was excellent, and what you did really well was pull out amazing anecdotes and stories and details that I don't even know how you found them all, but it was just page after page of fascinating.
Well, that's what I tried to do. I mean, I wanted to write a page turner that would keep people engaged, that had enough human interest and stories, and that would take them through the logical progression of how we got here. Which, I mean, people have accused me of being a doomer, and the first half of the book's kind of negative, and it is. I mean, look, I think if you have a problem, taking place, to deny it is just stupid and Pollyanna-ish, and so there is a legitimate monetary problem we have. That's, the fourth turning. I mean, look at all the things going wrong in the world. There's a lot going right, by the way, too, but you look at all the things going wrong in the world, I think you can find a monetary cause to so many of them. And so, I tried to write a book that would make the average person understand, hey, look, and in fact, when I started the book, it was after watching some debate with my wife where Team Red and Team Blue were yelling at each other, as they always did. And they were all yelling about stuff. I think it was actually Trump and Kamala debating. And nobody talked, there was no mention of the deficits, there's no mention of the debt, there's no mention of the monetary system, none of it, all of it, just completely, ignored. And I was kind of like, guys, you're arguing about the color of the drapes, the house is on fire. I mean, we got to fix this monetary system first. And so, therefore I thought, somebody ought to try and write a book that would explain this in a way that an average person would read and find interesting and understand. And that was the goal of my book. And as a test case, by what I did is I used my wife, to read it. And I said, you got to read this and tell me, is it interesting? Do you understand it? And she helped me a lot, because there were many points she said, I don't understand this. I mean, we got to the point she says, Federal Reserve, what's the Federal Reserve? You got to explain what the Federal Reserve is. I was like, oh yeah, of course I know what the Federal Reserve is. But there are a lot of Americans who have no clue what the Federal Reserve is. So, so I explained it. And then she had some great ideas. She came up with a section on skepticism and so on and so forth. So, look,
one of the things that I found about your book and many others is kind of the system was set up in the meeting was in 1910, and the Federal Reserve was in 1913.
Yeah.
This really wasn't an accident.
No. Oh no. Yeah.
That, this was intentional, and there was a very clear understanding. And I think that this is something that people definitely don't understand.
I think that's right. Yeah, no, I think people, and that's, again, that was another reason for writing the book. I think people inherently understand they're getting screwed. They don't understand it. And sadly, some of them think, well, maybe I'm just not working hard enough, or maybe there's something wrong with me. And all those guys who are billionaires, well, they're better than I am, or they're smarter than I am, And I'm like, no, that's not the case. The fact of the matter is they just rigged the game. And, you'd be a winner too. If you played in a rigged game over and over and over again, you'd be Bill Ackman. You'd be a winner.
And why was that meeting at Jekyll Island so secret?
Well, for the obvious reasons. Yeah. I mean, they created a money cartel. And it really was it's an interesting trifecta of interested parties, right? So you can understand why the bankers wanted to do it. They wanted a way to make great wealth with no risk because 1907 scared the shit out of them. So they didn't want to have another one of those. They wanted to have a bailout mechanism. Okay, fine. Who can bail you out? The government. You can understand why the government liked it because, okay, bankers, we'll give you what you want. We'll give you that bailout mechanism, but guess what? When we spend more than we have, you're going to figure out a way to finance it. You're going to loan us the money cheap. And we'll finance it through printing paper and diluting the supply of money and inflation. And then there was a third party at the table who benefited as well, and that was the professional economists like Keynes, who were like, we're the high priests of the monetary system, and we know better than everybody else, and you need to give us Nobel Peace Prizes, and like Krugman got, and so on and so forth, and pay us huge amounts of money to consult, and so on and so forth. I mean, Janet Yellen getting $7 million in speaking fees. I mean, give me a break. Now, those were just bribes from the banks, So the economists were in on the deal too. And there's actually a section in the book where I talk about that, how much money the Fed spends on supporting economic research and economic papers that support Keynesianism. And, if you wanted to get your PhD in economics in the United States, and you wanted to be, an Austrian economist and get your PhD, forget about it. There's no money for you. There's no sponsorship for you. It's probably even hard to get the PhD because you're not buying into the orthodoxy that keeps their nice little club and system going. So,
well, also the thing about Austrian economics to me is that it's a little bit like Newtonian physics. You're merely pointing out how the laws of economics work.
Right.
Keynesians spend all their time figuring out how can we tinker so that we can tweak it. And so it's a permanent job, whereas the Austrian economists
are like, yeah, just got it once, leave a free market, and walk away. Yeah, there is no work to be done because the marketplace will do it. That's right.
If you want this, then let the system do that. But you don't. The more you get involved, the worse the outcome is going to be.
Exactly. That's exactly right. And so, yeah, so it's a self-referential broken system with those three parties sitting at the table, and the screwee is the average citizen, and all of us really, and it goes larger than that. In the email we talked about before we set up the show, I mean, the implications are enormous because it's that government spending and that lack of control on government spending that permits wars.
Yeah, there's a human cost here that is really significant. That is also a hidden. You got to peel the onion to see it.
Exactly. I mean, so. This is how we get into, the Vietnam War, and, we pay for it through inflation. And by the way, this didn't just start with the Fed in 1913. I mean, it started, before that. I mean, there was, the whole issue of money has been a contentious issue since the founding of this country. I mean, the central bank, whether, what should be money, what should the banking system look like, and the banks have been abusive to the citizenry for a long, long time. I mean, before the Fed existed, one of the things that would happen is they'd get over leveraged and they'd suspend specie payment, which means they basically, I mean, in the early days of the country, a banknote was theoretically and supposedly literally backed by gold. And so if you had a 10 pound gold, 10 pounds, $10, it was supposed to represent a fixed amount of gold. And, but when the banks
would fail when it didn't.
Oh, yeah, exactly. Banks would fail. You bring that dollar and say, give me the gold. They say, sorry, we can't. We suspended repayments. So this has been going on. This is a problem as long as man and time, and it goes. I mean, it goes back. It reaches back through centuries and really millennia, because the Bible talked about honest weights and measures. Sound money being a moral issue. Honest weights and measures is nothing more than people trying to say, they would create a weight that was not up to par and say, well, I gave you X amount of grain when you really didn't because the weight was dishonest. And so that's just another form of coin clipping or dilution. And, the Romans fell all over the same issue. They took the denarius from all silver to all steel, and that led to the fall of their empire. So this has been going on for a very long time. And I think the thing that's most interesting to me is that even in the gold world, there's a certain amount of monetary dilution. I mean, humankind has lived with monetary dilution since, the founding of recorded history. However, and gold was the best solution to that because the supply grows at 1.7% a year. The discovery of Bitcoin and native digital scarcity took us into an entirely different world, entirely different paradigm. Because now imagine a world where literally the amount of money is fixed. And of course that horrifies Keynesians, but it delights Austrians, because what it does is it says the money becomes instantly sound. There will never be more than 21 million Bitcoin. And so as a result,
in history,
in history, ever, and we can break it all the way down to a Satoshi, and at some point there might be satoshis if that's
There will have to be.
There'll have to be, yeah, but that,
It's going to be too expensive.
Yeah, at that point in time, Bitcoin will be X gazillion per coin. But the point, and we won't really measure it in dollar terms anymore anyway. I mean, I think my grandkids, I'm sure, will, say, oh, that sandwich cost 3 Satoshis, or that car cost 1,000 Satoshis, whatever it might be. But the point I guess I'm making is just that we are now living in a system, or we have available to us a system, Bitcoin, where there is no monetary dilution, none, zero. We've solved that problem, a problem that has plagued humanity since the beginning of recorded history. I don't think a lot of people fully understand that, and I don't think a lot of people fully understand the implications of that. And
I think that's right.
and I think that's why a lot of people don't fully understand Bitcoin, and that's why I think a lot of people too who benefit from the old system are so deathly threatened by this. I mean, it's going to change everything about that old system.
Well, I'm glad that most of those people are not populating the executive branch of our government today.
Well, that's right.
They were recently,
right?
They may again soon sometime. One of the things that was a eureka to me about gold, again, I had some good history understanding what gold was and money and all that because Trey was so great. Lynn's idea that the telegraph made transactions larger and faster such that gold couldn't be settled fast enough and then had to be, it couldn't keep up. And that was the beginning of when the strains were being felt economically around the world that allowed the powers of governments to begin to get their hands on it. And then Safdien and the gold standard rounded this out by saying the only reason that fiat could ever have happened is that this concentration effect of the gold in the banks and then the creation of central banks to ultimately control that allowed the governments to overfund themselves during World War I. And that is a very important component of hard money, soft money debate, because if hard money is always so good and always crowds out soft money, how did it unwind? And the unwind is explainable by this.
Absolutely.
And the fact that it unwound and the governments have been abusing it as you would expect humans to do. Humans are humans. That's just what's going to happen. If they have this power, they will continue to use it. And when it all blows up, that's when hard money can be reestablished, especially if it can move at the speed of light with no incremental cost.
Exactly. And I think that really is one of Lynn's and Safe's great insights. It's just that, when we think about money, and this is where when I'm dealing with hardcore gold and silver partisans who hate Bitcoin, they're often like, well, yeah, but it's not physical, you can't touch it. And I'm like, yeah, okay, how much can you physically touch the money that's in your bank account, that you've got as digits on a screen? I mean, and honestly, even before gold existed, we've got Sumerian ledgers that show economic transactions. Just, I'd swap this for that, and so there was a price of something, and people were just keeping score, quote unquote, of what things were valued at. And so yes, I mean, money is and always has been a ledger. Gold and silver piece of it made it a physical ledger, and that physical ledger, that had a lot of value when you were traveling from China to Italy to trade goods back and forth, and you didn't believe the other guy's ledger, but you knew what a gold coin was. So, okay, I get it, but over time, as right, you get the telegraph, and suddenly you don't have to have the gold on the Pony Express, so the Butch and Cassidy can't blow up the train and take the gold. You send a telegraph, Bank of New York hereby transfers X million dollars to Bank of San Francisco, or Bank of America in San Francisco. And they both.
I love the story of France sending over the.
Yeah, right.
The
Well, the French kind of got.
Everybody thinks they're getting their gold, not so fast.
Well, yeah, not so fast. When you still kind of see that, I mean, there's still remnants of that, right? I mean, this woman Maloney in Italy is kind of, Italy's got a big gold balance relative to the size of the country and the population, just historically as a result of their position after World War II. And there's some debate as to whether it's clearly theirs or it's part of the EU. And the woman who runs Italy, Maloney, she came out and said, "Hey, let's clarify this, because I think these gold balances are ours, not yours." There've been plenty of this. There's been a lot of this. I mean, there've been people asking for their gold back out of the United States. The Germans did. It took much longer than expected. They didn't get back what they'd sent. They have to paint the steel bars in a there's that too. Yeah,
gold.
There's that too. Yeah, there's the whole fake bar thing that the Chinese have been pretty good at. So, yeah, I mean, it's funny. I mean, recently CZ and Peter Schiff had a debate.
I love that.
Right? And CZ gives him a gold bar and says, "Is this really gold?" Peter doesn't know. And therein lies the problem, right? I mean,
100%. So you spent some time on the solution. What happens when, as we transition to a better money system? Let's talk about that just for a few minutes.
Yeah, well, the world gets so much better, Bob. I mean, that's just the problem. Yeah.
Well, the first thing is, one by one, people realize this: if you just go buy some Bitcoin, then you will yourself have an insurance policy.
Correct.
So you can opt into or opt out of the fiat system whenever you individually want to. What happens to get the system back to a hard money?
Well, that's very hard to know and very hard to predict. But I think my
Not
view.
very many people have thought about it as much as you have.
Well, yeah, I've thought about it a great deal. I mean, I think that we need to get closer to that Gresham's Law moment where everyone's losing money. I mean, so generally speaking, in politics, things don't happen until there's a lot of pain, a lot of noise, or a crisis, right? I mean, people don't. What we should do right now is we should do a reset to a hard money system. Okay, just declare that gold's worth $40,000 an ounce, be ready to buy it or sell it. Have a balanced budget amendment. Maybe bring in Bitcoin as a piece of that. Do some bilateral thing where you've got two forms of cash. I in my book, by the way, I have the speech the president should give, and one of the things I recommend is that we make Bitcoin, gold, silver should all be legal tender as well as the dollar. There should be no taxes on the gain or sale of Bitcoin, gold, or silver, because there really are alternative forms of money. We should let the best form of money win. How do we get to the sound money standard? Well, my sense is what will happen is inflation is going to increase, and that's going to happen because it's kind of mathematically insured. The balance sheet will just have to grow. Lynn's shown this, I've shown this, plenty of people have shown this. To me, that point's not open for debate. The debate is how fast. Is it a gradual print or a big print? And as the balance sheet increases, we have more inflation. And this will be a decade like the 70s where we have these waves of higher inflation. And then, eventually I think the pain will become significant enough and people will be angry enough that they will start to advocate for either some sort of a reset or politicians who are willing to do a reset. And by the way, Trump and Basent, I think, are semi-aware of this. I mean, Trump has taken advice from Judy Shelton, who's a gold bug, talked about, gold-backed treasuries. Basent has said things like, we need another Bretton Woods, and if so, I want to be at the table. Bretton Woods is the last monetary conference that kind of reset the rules, so he's aware that there's a big problem here. He's a gold bug, too. And so, it's possible. Yeah, and he likes Bitcoin. Whereas, as Moran tweeted, Bitcoin fixes this. I love that. So it's possible that within this one Trump administration, they just do a monetary reset kind of, and there's a lot of history of the executive branch doing it. I mean, Lincoln did it, FDR did it, Nixon did it. I mean, the executive branch, even though it's supposed to be a congressional power, the executive branch has messed with the monetary system many times, and the Supreme Court's upheld it. So it's possible they just do a monetary reset, in the Trump administration. Now, that's a daring thing to do, and will there be enough pain to justify it? Will they do it? Maybe they'll look at if they're going to lose. They have to do it before they lose in 2028. I mean,
Wouldn't that need congressional approval and law?
It's unclear. I mean, Nixon went off the gold standard without it?
That's a really good
and it was never contested. I mean, FDR and I think Lincoln's moving away from doing greenbacks. I think that was contested in the courts, and I think also FDR's things were contested in the courts. So it's unclear to me, Bob.
By individuals.
Yeah,
give me my damn money back.
Yeah, exactly.
They were lost.
Yeah, they were screwed. They were devalued. So I think it's possible. But I guess
I did a podcast with Anthony Pompliano and Matthew Siegel, who's terrific. He does a lot of really good work. So let's talk about the Bitcoin reserve and what could happen there. And obviously, without an act of Congress, it could be reversed. So they're going to try and get an act of Congress to do that. Probably this year, I guess. Cynthia Lummis is saying she's interested in pushing it. We'll see. I hope that something.
Yeah, I hope. I've heard mixed things on the odds of.
That would be a good start.
That would be a great start. It would be a great
balance sheet of the country and start improving.
Well, and eliminating capital gains taxes on all these things would be another good start. I mean, but just kind of mapping out. You ask how this is likely to unfold. I mean, my sense is that inflation will be high between now and 2028, and so there'll be a very big and important inflection point in 2028, which is, does the dumb part of the country think, oh my God, this sucks, inflation's high, these people did it to me, these other guys are the blue team is promising me free stuff and better stuff, I'm going to make a stupid choice like electing Mondami and vote for the blue team. And if they do and the blue team wins, then we're going to get UBI and yield curve control. I mean, and by the way, we might already be at yield curve control at that point in time. I don't know, but my sense is that the blue team is even more monetarily inflationary than the red team, and so things get really bad in that time frame, and then I would think perhaps bad enough to the point where we really are in a full-fledged crack-up boom and everyone's losing confidence in the money. And I've said in the past, I mean, I think at that point in time, in 2032, Michael Saylor is the richest man in the world, and he steps in and he runs for president. He says, look, I'm an engineer. I've dedicated my life to this. I don't care about the money. I've already said I'm going to give away all my coins when I die. Got no wife and kids. I mean, he wants to be Thomas Jefferson, right? And he wants to be a historical figure. We need to return to a sound money standard. Here's how we're going to do it. And, have a constitutional convention, balanced budget amendments, term limits. I mean, just go through a list of everything that's broken. I mean, my sense is that the founding documents of this country are the most brilliant things, governmental-wise, ever written. And yet, over time, I mean, whether it was McCulloch versus Maryland, I mean, you name it, there are all these different things that basically kind of diluted the intent and got us to where we are now.
Remarkable to me is how differently the same words are interpreted.
Well, that's right. That's right. Well, when
the red team, it's
look, you've got human beings involved, and we've had mission creep and we've had drift, and I'm pretty sure the founding fathers. I mean, they revolted, against Britain with a 3% tax on tea. I mean, I think if the founding fathers looked at the average American citizen and said, this person's paying close to 50% of their income in taxes in some form or fashion to all governments and everything else, they'd be appalled. They'd be just like, hey, that's ridiculous. What the, that's how could you guys have let this happen, right? So my sense is that this fourth turning is all about kind of rebooting America. It's like turn the computer off and reboot it up under a new system. And
well, that's the optimistic case, and I share your optimism on that. I think that is what happens as America reboots properly.
I think
the pessimistic case is that the fourth turning ends, and it's
extremely
it's not so good.
Yeah, dystopian, and I mean, go read the Mandibles, and that'll tell you kind of the downside, right? And I don't think it has to be that way. I think there's enough institutional memory, and I think that the average American is a pretty good person. Really, and I've often said, I mean, the elites who run this system, I mean, they're vastly, vastly outnumbered. And they used to have all the tools. They had propaganda. They controlled the airwaves. They controlled everything. The message, the New York Times, was the paper of record. I mean, now everyone knows it's a rag that's worthless. And you can get more information from Tucker Carlson and Joe Rogan and podcasts like this and everything else. And so, as the book lays out, this decentralization, technology has saved us, is the bottom line, Bob. Technology has saved us. And my view is, I'm willing to bet on that trend that it's going to continue to save us.
And I'm in your camp.
Yeah, in terms of AI, everything. It's just, and people are all terrified of AI. AI is going to make our lives better. It's going to make, I'm now.
One of the things, maybe you've seen this more than I have, but my education in gold, I converted it in my mind over the years into the amount of debt that humanity is willing to take on when you're on a gold standard. And that is necessarily limited in old times to how much gold somebody has to lend against.
Right.
And you can't lend more than that because the borrower wants it, but the lender doesn't. I'm not going to go beyond that. And throughout history, I couldn't do private debt on top of government debt. So I just figured, let's just look at sovereign debt. And over centuries, it was always about 0.2 to 0.6 of outstanding gold above ground gold, the total amount of sovereign debt. And in times of war, it would spike, and in times of calm, it wouldn't. And then in the 1800s, it started creeping up. And by 1900, it was already over 1, and it got to 6.3, I think, at the high a couple of years ago. And I bring this up because it's with gold's astronomical rise this year, it's reversing. And it's reversing for the wrong reason, right?
Yeah, right.
The money isn't worth as much anymore. And
Right.
so the debt's still there. And
the dollar value of the gold has gone up significantly.
And I point that out along with the central bank reserves building in gold as potential signs that the loss of confidence is beginning, and that we up until you saw that, there was much greater confidence that the trust in the system is holding, and it may reverse, and who knows, but it feels like we're getting to the point where our long-term rates will have to start adjusting to the lack of demand, and we'll see what happens. But have you seen that idea of total debt to gold?
Yeah, absolutely. Or total government debt is against the gold balance sheet. Yeah, I mean, Ronnie Stofferly has some great charts on it, and others do as well. I mean, gold is still, and this is where there are those who look at a $4,400 price of gold and say, well, this has run a long way very quickly. Yeah, I wish I'd bought it at 2,000 or 1,000, but I'm too late. And they are, kind of in a traditional sense, if you have an investment go up that much that quickly, you worry about a pullback. And while there certainly can and will be pullbacks, I'm sure of that. What we're talking about here is a once in 100-year kind of shift in the monetary order. And there's some interesting data that I've got out. It's actually, this is in the book as well, and I always found it useful that there was a time in the 60s and 70s. There was a time when you could take the entire U.S. monetary base and divide it by the gold we aimed to hold, 261.5 million ounces, and you came up with a $35 reference price pre-Bretton Woods or post-Bretton Woods, but or 42, one or the other, but pre-Nixon breaking the link. If you did that same calculation today to 100% cover the M2 money supply, gold would have to be about $90,000 an ounce. So what that suggests, and it's at 4. So what that suggests, and now I'm not going to tell you the gold's going to 90,000. It's not.
No, but it suggests what
it explains is just how much paper has been printed, and how far. I mean, really, gold has almost effectively been completely demonetized. People have kind of completely and effectively said, you know what, gold just isn't money anymore. We don't care. I mean, Bernanke said it in one of his testimonies. Yeah, somebody asked him, I think Ron Paul asked him, why do you hold this gold? Well, tradition, right? Well, no, Greenspan had it right. Greenspan said overall gold is money par excellence when in the collapse on trust and everything else, which is possible. I mean, the US dollar has been very, very strong for many, many years, the leading currency in the world. But if the trust on the U.S. dollar collapses, the only form of money left, that's got 5,000-year track record of proof in history, is gold. And so, it's in dollar terms, it could, it really has no top because fiat really has no bottom. and I hesitate to say that, Bob, because I'm not sure we're going there. But we're, let me say. As an investment manager and as a guy who gives out free advice on Twitter, and everyone's situation is different, I'm very comfortable saying that I think we have a lot more debasement and inflation in our future, and therefore I think we're on the right side of this trade. Now, go Google the Myrmikan Weimar gold chart, on Twitter or anywhere else, and you'll see that, yeah, right, it's in the book too, and you'll see that, they're going to be swings, right? And so, maybe at 5,000 we're way ahead of ourselves, and we have a shocking pullback to 3,800, and everyone thinks the gold bull market's over.
Well, having spent my life in the stock market, one of the things that I loved is that there's a truth, and you never quite get there, but whatever the direction is, you're going to see it in the stock at some points.
I think that's right. And so, in spite of the fact that gold may hit 5,000 soon, may pull back to 3,800, I don't really know. I'm quite comfortable in saying that 5 years from now, I think it'll be a lot higher than 5,000. Do you know what I mean? Because unless something we were talking about earlier, unless this monetary debasement stuff changes, they get fiscally responsible. But as we talked about, the odds of that are not very high right now, anyway.
A couple of quick thoughts on Bitcoin. What I find interesting are the following facts: that the 1 year hodl rate has been around 60. It just went from 62 to 58. Okay. Which is surprising because it happened very quickly, and it doesn't normally happen that way. So something's funny about what happened a year ago, probably. But and so a majority, a pretty healthy majority of Bitcoin is held for longer than a year in wallets that haven't moved in over a year. We have volumes that have exploded this year to on the weekends it's around $30 to $40 billion a day, and during the week it gets to 90 billion, not infrequently, but it's in the overall it's in the 60 to $70 billion range. And the higher that volume goes, the faster you deplete the remaining 40% of Bitcoin that is trading every year.
Right.
And we do know that there's an enormous amount of publicly stored Bitcoin, primarily corporate treasuries, that is with the intention of not selling it. And so we can anticipate that we actually are doing pretty well on the continuation of this high hodl rate. So what is the selling pressure? How could it, where is it, and are we really going to run out of that selling, the volume, the Bitcoin available for sale?
Yeah, no, I think we will, Bob. I mean, so what I've seen, and Checkmate, he's on Twitter, he has some really good charts on this, and I've retweeted a few of them. I mean, one of the things that's happened, I mean, the positive that's happened in the last couple of years, we had the ETFs, we had the institutions enter, we've had big names like Harvard tripled their allocation to Bitcoin, and it's now one of their largest, I think it might be their largest holding, in their endowment. So we've got all these, we've got BlackRock, et cetera. We've got all these trends that are enormously Bitcoin positive, and yet the price hasn't exploded to the upside. I think what you're seeing is it's becoming much more of a traditional finance asset, and so you're seeing paper Bitcoin. And so there are, I'm quite certain there are a lot of people out there, and I know from friends on Wall Street who've told me this, that, and this has worked, by the way, for these guys, and it'll work until it doesn't, that have been long the triple Qs and short Bitcoin, because the two are very highly correlated. Now, think about that. Triple Qs are extraordinarily overvalued, and in my view right now, using the power law, Bitcoin is undervalued. So when that reverses, it's going to reverse with a vengeance. And I think one of the things people don't really understand, and if you've been in this business a while and you've looked at this asset for a while, they don't understand just how volatile this asset can be and how big these God candles can be. I mean, so I remember 2020 very, very clearly because the GFC occurred. And when it did, gold went from, 1,500 to 1,100 actually to 2,000 very quickly, because they printed a ton of money. Gold saw it, reacted to it. My fund went up, the gold stocks went up. They all went up. Bitcoin just sat there at 10,000 for like 3 or 4 or 5, 6 months. There was kind of a delayed reaction. And then one day it just woke up and it went from 10 to 60, in like 2 or 3 months. And so, we're all sitting here bored with Bitcoin in the 80s, thinking, is this over? What's going on? A lot of FUD, quantum FUD, whatever, core knots FUD. I don't think most people are aware of that, but there's just different reasons why some people think, well, maybe it's not going to work this time. And I'm like, no, the power law is intact. It's definitely going to work. And, one of the things that I think most people don't understand is, and this is a great fact, and Fred Krueger wrote a book called Bitcoin 1 Million. You should buy it and read it. It's a good book. Get this fact, and I'm pretty sure he's right about this. I haven't double checked it myself, but I assume Fred's thorough, so I think he's probably right. So from 2020 to 2024, Bitcoin went up 8x, round numbers, okay? In that same time period, if you missed the 10 best days, you were down 23%. So, okay, so you want to trade this asset? You want to market time this asset? I mean, you know, I'm not predicting this will happen. I'm not saying it's going to happen, but it is entirely within the realm of possibility that at some point in the future, they're going to turn the printer back on in a big way. Liquidity is going to come surging back into the system, and Bitcoin's going to go from 89 to 180, you know, in 3 weeks or less. Do you know what I mean? And you're out of it, and you thought, well, shit, it was going down to 60 or 70. I would have bought it if it went there. Well, guess what? You don't have a chance to do that anymore because it moved that far, that fast. And that's how it trades. And I don't think a lot of people understand that.
No, I completely, it's absolutely right. And I have seen that statistic. And so it's an easy play toy on the short side in the short term.
Right. Well, that's right. I mean, and you know, I know a lot of people, I mean, like Luke Grumman, who I enormously respect, he's got stuff in my book, but he's more of a TradFi guy, and he's like, well, at 95, I thought it was weak, so I'm going to sell it. Well, really, Luke? Okay, first of all, you got to pay tax on it, 23%, so you got to get it back to 77 to get the same amount of Bitcoin as you once had. And then you're going to, you know, you're going to play to maybe pick up a nickel at 50 or 60 if it goes that low. I don't think it will, but it could. You know, that's worth not being in it when you know that any day you could wake up and suddenly it's up 30 grand, because that's the way it trades, you know. So
one of the what I always citing is the settlement to the Bitcoin ledger.
yeah,
The derivatives markets though allow players to create almost unlimited near-term supply.
absolutely. That's
And
always,
so
and this is the problem that gold had as well.
Yeah, and
Yeah.
so you're seeing all of this selling pressure because people can create that selling pressure, but
That's
it's
right.
not actually real when you look at how many Bitcoin are
Well,
actually out there.
that's the point. They're selling Bitcoin they don't have, and so at some point, you know, it's what do they say? You know, you got to buy it back. You short sellers, you got to buy it back or go to prison. I mean, you know, and I think some of these shorts are going to have a religious experience because this thing doesn't trade like a regular asset.
Yep, and that underestimates the amount of buying power that a dollar buys in a derivative contract.
Correct.
I'm just buying an option, and I don't have to put up all that capital.
Well, that's exactly right. And so, and there's enormous leverage in the system. My partner's done a lot of work on this, and it's really, you know, look, Bob, and this goes to the societal implications of all this thing. I mean, you know, the market, all of these markets, they kind of feel like a gambling casino to me. I mean, it's just, it's amazing. I mean, people, you know, the meme coins are still alive, you know, the AI stuff, the Mag 7, I mean, it's just, and everyone thinks they can't lose. And, you know, having done this for 40 plus years, I'm here to tell you, you can lose. You can very definitely lose. And you're likely to, sometimes when you're absolutely sure you're not going to lose, that's when you're most likely to lose. And so, you know, some of these people who are short Bitcoin, they think they can't lose. Some of these people who are long the AI stocks, they think they can't lose. You know, look, I'm a simple guy. I want to hold forms of money that are things that I believe are forms of money that cannot be printed. And, you know, silver, gold, and Bitcoin meet that standard. And I'll dollar cost average them over time. I mean, I was buying silver at 4, I was buying it at 9, I still own it. You know, and there's come a time when I'll probably sell some of my silver because it'll, you know, I'll view that it's ahead of something else. I mean, I actually say, I look at the Bitcoin gold chart quite a bit, the ratio of the two. And if you had an extra dollar today and said, where are you going to put it, Bitcoin or gold? I'd definitely put it in Bitcoin. I mean, Bitcoin is as cheap as it's been since against gold for a long, long time. It's right at the bottom of the trend line. And I think that trend line will continue, and I think eventually it'll get to the point where it's above the trend line. And I mean, who knows, if Bitcoin goes to 250 or 400 and, you know, gold goes up to 5,000, corrects back to 3, you know, maybe I'll sell a little Bitcoin and buy a little gold. You know, that's, you know, I'm talking small amounts around the margins. I mean, I just have a, you know, a lump sum of each that I just hold because I know they're going to protect me from debasements. And then I watch the debasement trend. I mean, if suddenly the government got responsible, you know, I might behave differently, but, you know, right now it doesn't seem to be likely.
No, actually, and it just seems like there's a turning point. You know, the Fed's balance sheet is starting to go
Well,
up.
exactly. Arguably, they're going to get less responsible right now. I mean, You know, Jerome Powell has got to be sitting there saying to himself, oh, dear God, just get me out of here before this thing blows up. You know what I mean? Seriously. Because, I mean, he's not stupid. I mean, he can see it. He knows mathematically he's trapped.
Man, I've made it through so
yeah,
far.
right? He's like, you know, Princeton will give me another award. They gave him a reward as like the most successful alumni. A couple of years ago, after he saved everybody from the GFC, they were like, you know, he made the biggest contribution. I have a friend who's a Princeton grad said, oh yeah, they gave him this enormous reward for all that he'd done and blah, blah, blah. And he's probably, now he's sitting there, I mean, I noticed him at some of these press conferences. I mean, he's not the same man. He's scared, he's beat up, he's looking at that exit, he's waiting for May to come. He's hoping he gets out of here without having to turn this into the big print, that he can just kind of get a gradual print from now to then and move on and let the next guy deal with it. That's my sense, so.
Well, Larry, this has been fantastic getting together. Thank you so much for
Thank you, Bob.
And thank you for writing that great book.
Oh, thanks.
I hope everybody reads it.
Yeah, well, there it is. There's the book.
I got mine just somewhere around here.
You don't have to, yeah.
It was fun reading it a second time.
It's available on Amazon, all formats, Kindle, hardcover, paperback, audio. So, yeah, I mean.
I look forward to seeing you sometime soon.
Yeah, likewise, Bob. I always enjoy talking to you, and I'm sure I'll bump into you at Bitcoin events as we go forward. So have a nice holiday season. Best wishes to everybody else out there. And thank you to everybody who's bought the book and supported it. Hopefully we can get this message across to enough people and fix this system.
Absolutely. Great. Thanks a lot. Happy holidays. I hope you enjoyed this video. Much of Exploring Prosperity is about understanding pessimism, especially the idea that the next generation will be worse off than the last. I try to test that belief against history, data, and long-term trends. If that approach resonates with you, please subscribe and join the conversation. I write longer essays on Substack, and I post regularly to X as well.